Today's number, 84%. That's roughly the percentage of people who lose money on Polymarket. In this episode, we're going to discuss how to be the other guys. Welcome to Polymarket Prof. I'm Professor Benjamin Smart, and on this channel we use prediction markets to help analyze current affairs and test whether ordinary investors like us can profit from the wisdom of the crowds. Now, prediction markets are often presented as exciting new financial instruments, and they kind of are, in much the same way that a chainsaw is an exciting new kitchen utensil. For most people, most of the time, prediction markets are not investing. They're gambling. And that matters because gambling is how people end up unable to make the mortgage repayment, unable to put food on the table, unable to explain why they thought a last-minute bet on Ohio was portfolio diversification. A recent report suggests the median retail prediction market user lost about 8% overall over the period studied. So the basic picture is not easy money. The basic picture is clever interface, familiar mistake. Now, what are prediction markets? Very simply, you buy a contract tied to a future event. If the event happens, it resolves at $1. If it doesn't, it resolves at 0. Before then, the price moves as the crowd's confidence moves. So in one sense, you're trading outcomes, but in another, more important sense, you're trading collective belief. I have a whole video on that. Check that out. And basically, this can be done in two ways. You can either do it like a gambler or like an investor. A gambler is impulsive, emotional, all or nothing, always one trade away from making it back. Gamblers chase losses, hold losers, tell themselves that they were basically right, which is one of the most expensive phrases in the English language. They want excitement, big wins, and they're driven by dopamine. Usually, they get bigger losses. An investor is meant to be much more boring, and that's a compliment. Think about stocks. Sensible investing is usually not about one glorious moonshot. It's about trying to generate smaller, consistent returns over time. You diversify, you size positions properly, you manage risk, you accept that you will often be wrong, and you build that fact into the strategy. Because investing is not really about being right. It's about surviving being wrong. So the question on this channel is, can prediction markets be approached in that way? Can ordinary people use them with discipline rather than as a slightly more intellectual route to self-destruction? That's the experiment. To run that experiment properly, I need rules. Here are mine. First, no more than 10% of the portfolio in any position when bought. Second, every trade must have a reason and an execution strategy. Why am I in it? What am I waiting for? What would make me get out? Third, if the reason for the trade disappears, the trade gets closed. No drama, no denial, no inspirational background music. Fourth, take partial profit when positions move significantly in my favor. I mean, if I was holding a stock, that's what I do. So that's what I'll do when trading Polymarket contracts. Fifth, unless there is a clear strategic reason, don't hold contracts until expiry. And sixth, complete openness about profits and losses with regular portfolio updates on this channel. This is my YouTube account. The sums will stay fairly small. I'll add small amounts over time so the portfolio can diversify further and so that I can continue to make content for this channel. But what matters here isn't really the dollar amount anyway. It's the percentage return, because it's gamblers that talk about how much they won on one trade. Investors care about whether the system works. Now, to judge whether this experiment is succeeding, we do kind of need a benchmark. Not some absurd fantasy return that belongs in a crypto scammer's comments section, a real benchmark. So I'm going to compare the portfolio against the NASDAQ 100 over time. If this prediction market portfolio can beat that on a disciplined basis, then maybe there is a genuine case that these contracts can be used as investment vehicles. If not, then perhaps prediction markets are just gambling in a blazer. Either way, we'll learn something. So that's the project. Can prediction markets be used like an investor uses risky assets? Or are they, for ordinary people, mostly just a very efficient way to lose money whilst feeling informed? We're going to find out. If you want to see what contracts I'm buying and why, please like and subscribe and share this video. But please don't take anything here as investment advice. Do your own research, stay within your limits, and remember, on these platforms, you really can lose the lot. This channel is an experiment, not a rescue plan.